All right, we're back for another episode of our Assets and Algorithms podcast. I am joined by Joseph Dietz, who is a leader over at Beacon Investments. And I want to thank you for joining us and taking the time to talk about property and technology.
Thanks, Derek. I appreciate that. I'm happy to throw my 2 cents your way and also to hear what you guys have to say. I'd love to get some perspective from your side of the country. I know real estate's kind of a common language now throughout the country, and but the perspectives and the different trends, they come in waves. Stuff that happens where you're at takes a little while to get out here, and vice versa, and I know that from back during like the financial crises in 2007, 8, 9, also through COVID and all these other different lovely large impacts on our economy and our world in our lifetimes. They've hit different areas and different product types and different parts of the real estate market in different ways. And I think that's part of the learning experience that people in the industry have gained. Um, it's as we go forward with all the stuff that is going on current globally, current administration and stuff. Those are all going to impact how we do business and how we find our niche going forward. So, yeah, that's a cool part about our business. But I think it boils down to one thing: the real estate is a facade. It's all about the financial marketplace, at least for commercial, meaning all product types essentially. But for residential, obviously, it's a lot different, and that's not as much my expertise. I've always been in commercial. So that's kind of, I'll put that out there to start the discussion, is that my background is much less the residential, although I did a lot of condo conversion, even condo reversion, but I've come at it from the angle of the commercial real estate, commercial investors, and the commercial institutions that I deal with for financing. So that's where my perspective comes from. Just sharing that up front.
I absolutely appreciate it. I think your perspective is going to be really valuable. We talked a little bit about your experience and, you know, where you've come from with a bit of a tech background, marketing, and now, like you mentioned, with the commercial real estate. I just want you to share a little bit about your role and how it fits into the bigger picture over at Beacon Investment.
Well, today's an interesting day because we're actually closing Beacon. My partner is actually working for one of our clients we've been helping. And I actually am talking to another client who also wants help, that I may be working with him in his organization, or I also have my own organization that I've just been working on, that's a technology-based company. And then I also went and got my broker's license in the last month. So I've been busy with all these transitions. Essentially, where I'm at now in my career, I'd say I'm kind of a real estate consultant, real estate salesperson, and eventually a broker. But I would say that consultant is probably the truest definition of how I practice business right now. I've got a lot of clients that look to me for properties, for advice, for opinions, which I'm happy to give. I'm a crusty old man. That's what we do. We give opinions, even if they're wrong. So, hopefully that'll help somebody. I feel like over the course of my career, I've helped a lot of guys in and out of tough situations. And that's been my learning, is working on tough deals and tough situations. So, I guess it leans towards creativity, and also the fact that I'm just willing to keep learning and keep growing in tough marketplaces, tough challenges. Beacon was a small brokerage focusing mostly multifamily. So I would say multifamily is, of the commercial product types, that's the one I'm most heavily invested in. And that's what I can help people the most with experientially.
Well, that's amazing. You mentioned a few things there. First I want to say we're definitely appreciative that you're you're here and able to give your opinions with all of the experience you have. And I know you mentioned a technology business and some of the things that Beacon focused on as far as multifamily and commercial. I want to ask you about some of the major shifts that you're seeing in the industry right now in that intersection of real estate and technology.
Yeah. Well, I think that the first major shift occurred coming out of COVID is that we started to return to normalcy, I think, in the financial marketplace, and meaning that the interest rates went up, but a lot of you younger folks, you are thinking that, wow, that's real abnormal to have such high interest rates, 5, 6, 7% for real estate loans. But that really, historically, if you look at the last 30, 40 years, that would probably be right in the middle and of
Hmm.
where financing normally would be. So what you guys are freaking out about, a lot of us older folks are thinking, well, it's not so bad. It makes sense. I mean, look at it this way. If you were to give somebody a personal loan, you would probably want to charge a little more than the bank, right? But you don't want to overcharge. And that kind of place right there is about the same conceptually as where real estate is that when people invest in real estate, they want to return higher than a bank, obviously, but for nice properties and nice locations where you're also getting appreciation beside your interest on the loan or your investment, in terms of cap rate, then you're probably in about the same space there, somewhere 5, 6, 7%. You start getting 8 and closer to double digits, and people start freaking out on you a little bit, like you're being agreed
Hmm.
on something they believe is a good investment, right? That's the first thing. I think that we were starting to return to normalcy, but now I think that you had a pretty solid base of normalcy, but now the current administration is throwing in a whole bunch of volatility. Let's just call it that. I mean, objectively, I can call it all kinds of things subjectively, but objectively, let's just call it volatility. The market is more vulnerable, more susceptible to change now than it was a year ago, and it'll probably get worse for the foreseeable future. So that's going to cause people to do different things. Some people, they run for cover, they hide under the covers and they bear down on whatever they're sitting on. They just kind of cover their assets, as they say. Other people will, start to think about this. They'll analyze it. They'll look for the gaps, kind of like, say you're a kick returner, you're going to look for the holes. And, some guys are going to try to run around them. Some guys are trying to sneak through them. Some guys are going to try to blast through them. There's all kinds of different strategies in our business. But I can tell you, with all this volatility, I mean, the advantage that some people have in this is if there is a game plan, they know where it's going and they're a step ahead of us. So that's the disadvantage a lot of us are at. But you can overcome that with your experience and your wisdom, and also good analysis on how to plot your course and contingency plans, etc.
Hmm.
So when I talk to people about, okay, where are we at now? What's going on? It, when it's residential, it's kind of like art. Do what you love, right? And that's really your first passion, your home. It's your sanctuary. It's everything that you are. Do what you love, and nurture that.
Right.
When you get into commercial or investment, then you got to do what is, I think, when it's more volatile, you got to kind of go back to basics. You got to say, okay, I'm not going to buy on the come, as they say. I'm going to go in and buy on real numbers, actual data, and I'm not going to take on crazy loans. The funniest, the dumbest thing I saw in the last 5, 10 years, where we are literally, the Fed was, their back was literally at zero prime rate. And these idiots were going out and buying, or they were taking on um, adjustable rate mortgages.
Right.
Well, there's only one direction those adjustable rate mortgages are going to go, right? And because they got greedy, they saw that there was cash. I'm a not only adjustable rate that I'm going to go interest only.
Mm-hmm.
I'm not even paying down my debt at all. I'm just going interest only and adjustable rate. And I'm getting a lot of cash now, but future was really going to change quickly for those guys.
Yeah, I
As the
think.
rates go up and, say you're in a bridge loan, which most of those guys were doing some value add, strategy.
Mm-hmm.
The other thing that happened is that a lot of the low hanging fruit that made a lot of sense for value add strategies was sopped up, it was
Mm-hmm.
all chewed up. Then the guys that came in a little later, or maybe we just stayed in too late, they were, you know, chewing on fruit that didn't really have, like in areas of our, like in our metro area in Phoenix here, areas of town where putting granite counters and doing high end upgrades because you can increase your loan value
Mm-hmm.
in order to get more money to play with, to do your renovations and more investment frenzy around that. But, that is stupid because they're in the hood or in areas where people can afford it. And so they're, like,
Yeah.
it's like going to the, tough area of town and trying to sell a Maserati or a Rolls Royce. Like you
Mm-hmm.
invested in that, and all you guys are all on for a ride. But if it makes you feel any better, now you're sitting on a variable rate loan. The economy's about to change because it can only go one way, right?
Mm-hmm.
That was all fun and stupid, in the difference, that was the other difference that probably should spell out. In my real estate career, when I first got in, it was the old guys, the old money, the people that, had good connections for getting information about real estate, because
Legacy.
real estate was both an information game and a
Mm-hmm.
finance game back then. The real estate broker, they would they were definitely loose lips sink ships type of mentality. They didn't share information except amongst their qualified investors, and then those were the guys that were privy to the deals. Then along comes like CoStar. I'll give them credit, even though they're a pain in the ass. LoopNet and there's other subsidiary apartments.com, homes.com, but information started becoming available, not just CoStar though. There's a bunch of other, real data, Trep, good technology sources, different types. Zillow, yeah, definitely Zillow. In fact, Zillow, I give them credit for coming out with the first algorithm for that I know of nationally for evaluating home prices, home values. Now, we realized that their algorithms were not exponential regression when they should have been when the economy was moving exponentially, especially during the crisis. But I
Mm-hmm.
think that was just part of the learning curve. And now the Zillow algorithms are much better and stronger, as well as other companies in the same sort of space. But information became more available to investors, to buyers. And that meant the brokers had to kind of change from, knowledge hogs and, like a kind of a closed in type of business model to more of an open one. Okay, let's embrace everybody that comes our way.
Right.
Let's know how to process information rather than sit on it and hatch eggs from it. We're going to,
Mm-hmm.
start getting it out there, start working with it. And, that's why you see a lot of, I think there was a mass exodus of old brokers right at the end of the financial crisis because the new model came out and new investors came out. We started dealing with a lot of syndicators in multifamily where, a lot of young guys, they would pull together their money
Mm-hmm.
and they wanted to move quick. They understood the process pretty easily, and they definitely started beating out a lot of these older investment clubs or groups or individuals or families. So all of a sudden, that's what I've seen the biggest change in my career is transition from a closed small network type real estate investment industry to more of a wide open, but it's still bogged down by some of the older established organizations that still have a big play in real estate. One is the NAR, dinosaur, right? And they'll do everything they can tell you to say they're not, but they are. In MLS, that weird relationship between MLS and NAR, it's just wrong.
Hmm.
It's wrong. I mean, it really is. Commercial doesn't have that. A couple guys tried to do that, like CoStar. They lost a big antitrust in one of their big takeovers for data and for. So I think that now in commercial, where there's more creativity in the technology space, because that's where we're going, right? We're going towards being able to deliver real estate. In fact, that's why my new firm's called Liquid Property, with with fluidity, without all the bullshit of, who do you know, who are you about, what family you from or whatever, and moving towards everybody can play ball, as long as they know how to play ball and have the money and, get their ducks lined up. And then at some point, I think it'll favor the fastest, not just the wealthiest,
I,
smartest, and not just the wealthiest. It'll be all about what it should be: smart investors doing business. And this is where I divert from the stock market. That's the beauty of real estate: is you control your own destiny. You buy your own product, you nurture your own product, you control your own books. And, there's not some fat, fluffy CFO or CEO taking money out of the books you don't know about,
right.
hidden amongst the administration costs of some stock, publicly traded company. Always my thing with the stock market is, like, as I was in corporate before I got into real estate, is like, it's
Hmm.
like there is a lot of fat on that bone, and what you're investing in is out of your control
Mm,
completely.
right.
Yeah, you can make all these stories you want about why it's going up or down, but the truth is the decisions are being made in administration as to how much revenue, how are they going to publish their earnings. There's still a layer of no control to you.
Hmm.
And then we talked about that before, whereas the other thing in real estate, you've got the leverage, which is a wonderful way to invest if you do it right. What I mean by that is not over levering and then not under levering, because there are a lot of books written on it, a lot of smarter people than I am, as far as, okay, what's a proper way to use leverage, and how much leverage should you use when you go to make an investment.
Right.
And I've seen a lot of guys use leverage in their investments and do very well because they were, stable investment strategy, and almost didn't even matter to them what was going on around them. They were buying solid properties. They were not over levering them, and then they were just managing them well. And like in multifamily, if you do that, the community will respond. So the best owners are always the ones that know how to work with their community. Anyway,
Absolutely.
I went off on a tangent, man. Sorry.
No, I think touched on a ton of the things that I was looking forward to you touching on, as far as MLS and some of the platforms out there that have been able to support real estate, from Zillow to CoStar and their various platforms. You touched on a little bit about differences between stock and real estate and the asset classes, and how they're viewed on the marketplace and how you can leverage or maneuver them in different ways. So all of that was great. I super appreciate that. You talked a little bit about, or you mentioned liquid properties, which is going to be your new venture. Is that the technology venture you mentioned a little bit earlier? Can you tell us a little bit more about that?
Yeah, it's something you and I discussed a little bit in the last call. I was in actually healthcare, and it's my master's in health administration. And when I was working for Mayo Clinic, they asked me to go take some database classes so that I can help them build a database to figure out how to collect all the data in that location, which was in Scottsdale, and then also kind of project what they were going to need for capacities in this new hospital they were planning to build. In other words, how big should the labor and delivery department be? How big should the plastic surgery department be? Remember, we're in
Hmm.
Scottsdale here, so it's got to be big. How big should, critical care, cardiac, et cetera? And so that's where I started learning projection modeling. And, we were segmenting by department. And then, you make all these other assessments about, the population, and you try to tie that to population trends to, capacity of the organization, and just all this stuff where you're taking a lot of data and you're trying to analyze it for business decisions. From Mayo, I did that as part of my getting my degree, and then it's like a residency, if you would. And then I got into pharmaceutical market research, which is my first real corporate job. And I worked for a company, it used to be called NDC Health. And we were in the pharma division, and we bought data from retail pharmacies, like 300 million records a month from pharmacies all over the world. So we could track patient behavior
Hmm.
by number, not by name, because of privacy law.
Right.
We could track physician behavior, who is prescribing what, and pharmacy behavior, which pharmacies are dispensing the most of what type. And you start to see regionally the different behaviors, like, different types of drugs are more prescribed than other areas, even for the same types of diagnoses. And so it's kind of interesting. It
Mm.
was cool technology wise for me back in the late 90s, when it was from mainframe data. These were DB2 databases, or they're huge. They were terabytes of data. And then we started to pull the data into the middle tier with Unix Oracle and Microsoft SQL Server databases. And then we started tying it to analytical tools and doing projections and models through the different segments of the population, different types of drugs, et cetera. Like there was just a funny story. There's because now it's like our eyes are opening to all this data and all these trends. So
Hmm.
when we're segmenting it, we're like, hey, wow, there's a doctor down in Florida prescribing the hell out of this type of drug, right?
Mm.
Pure cocaine used for dental surgery.
Wow.
It's like his prescribing behavior was way above normal for a
Hmm.
dentist of that type. And we're like, well, either something's wrong with the data or something's wrong with the behavior. After we figured it out, the data was good.
Wow. Wow. That's really interesting. So it sounds like what you're going to be doing is taking that technology and applying it to real estate to be able to identify patterns of purchasing and selling on different type of properties and investment behaviors.
That is exactly what is going down, because, healthcare data is massive. Real estate data is massive, especially, talking about like a property, the profile of a property, residential, it's not so bad. It's just basically, the age of the property, the size of the property, and just all the different characteristics about it. But
Hmm.
then you throw in like a big, apartment or retail, a building with multiple suites and multiple tenants, it becomes a very robust profile of what a property entails from a data
Mm.
perspective. So at first there was data overload, kind of like what we were dealing with back in healthcare. Then the systems and the technology started catching up to where not only can we store the data, we could use the data. And then
Mhm.
not only can we use the data, now we can see the data. And now we can jump around that data and ask questions and literally talk to the data and get answers from the data, right? And so that's what's going on in real estate. But then, it's like, great. So you can answer all these questions and stuff. Once you got questions, I know what I want to do. Like, I know how I want to invest. How can I move quickly? How can I buy that property quickly?
Mhm.
So what my liquid property is all about is I want to be able to say, you're an owner of multiple properties. I'm going to be able to tell you, because owners hate to call brokers, because what
Right.
brokers are.
Mhm.
They're like dudes on dates. They're not there just to have a drink with you,
Right.
because they want to transact business.
Right.
When you use the bar analogies, people understand them so easily. It's awesome. So yeah, a broker, whenever an owner would call a broker for like, hey, can you tell me what the value of my property is worth? The owner in his mind is cringing because he knows that broker is gonna try to, take them home. Consummate a deal, as they say. Man,
Right.
you make it sound so dirty around here. Just guys talking business. But no, it's the truth. And so what I like to do in technology is just be able to offer that information without the cringe factor. And so I've got a portfolio. I want to know the value of my portfolio of properties without having to ask a broker, where I can just go on anytime I want and see what the value of my portfolio is, and then see what the market's doing, and kind of compare the outlook of my properties to the market. Because usually the guys I work with, they'll have a portfolio and they'll say, okay, I got some beauties here, I got some dogs here, I got some potential here, and I got some, I don't know what the hell this is here, right? And so they're trying to watch all that and manage all that. And when so over time, you want to know, okay, my portfolio is going up. And because in real estate, like in the Phoenix area, I'm going to brag, our our appreciation's pretty strong here. Properties is, 10 to 20% on average. Um, I've seen guys go from like exponential returns, come in and buy, $5 million properties, and then within 10 years sell $200 million properties. And that's just smart investment
Mhm.
strategy, using leverage. And basically, as they profit, they turn around and put it back into more real estate. And then
Right.
you into the whole discussion about, do I want more units, or do I want a higher quality asset, or, what's my game plan, right? So they need to move quick. Yeah, the point is that people need to be able to make decisions and then act on them with all this information. So that's the crux of what I'm working on with liquid property. Not only are you going to have the information you need as an investor or an owner, that you'll be able to click a button and sell it, click a button and refinance it, click a button and, burn it. No, I'm just kidding. That's a joke.
It's
You would laugh how many times I hear that joke in real estate. That's the scary part.
this it is more common than we like to admit. But I love, the mission and how you guys are putting together liquid properties. I definitely be interested in hearing more about it.